we are starting off today looking at one of the portfolio stocks that is focused on credit. So private credit specifically, it's called Eagle Point Credit. Daily time frame. This is one of the dividend players in my stock portfolio. Solid. It pays out about 9. That's the expense ratio. About dividend yield 40.29% on average right now, as far as the calculated average on Webull. But it has been in a heavy downtrend. On a monthly time frame, we're still dipping down, but this is one of the things that comes with dividend stocks. You expect a little bit of volatility and a good portion of sideways motion compared to a accelerated exponential curve to the upside. So you're looking mainly for income, but as far as their earnings, they did beat on their earnings per share at plus 0.23% versus the 0.21 cents, not percent, cents expected. They did miss revenue. They did note in their earnings call yesterday that the default rate has decreased compared to the last few months of last year, which is a good sign that people are paying off their credit, especially businesses, because that's who they offer credit to, those private companies and some public companies that need that funding to sustain their operations and to grow. And I believe they help. No, they just provide credit. They're focused on loans. But they also, with the information release, they also noted that they have began, as far as a company, spreading out their reach as far as what they invest in with the money made through their funding. So instead of just focusing specifically on private credit and providing credit to companies and entities, they are now spreading out beyond that to maintain longevity. Also, they have a new European partnership, which is solid. They did cut their dividend so that they could maintain their company cash flow and company sustainability. So that is something that we are going to have to watch, because if they continue to cut the dividend, this is why we bought into this stock. So that's something to watch. And then their NAV decline, which is huge. So a lot of warning signs right now as far as the private credit markets, which has had a lot of negative sentiment lately because of the deregulation in the public markets by this current administration. So we're going to keep an eye on this stock. This is somewhat similar to what has happened in the past, the major drawdown in 2020 going into the pandemic. So it's not